you suggest that one of the positives of helicopter money is that it wouldn't discourage the reform agenda in Europe in the same way that maybe QE has. But were you surprised at yourself, I suppose, writing this positive piece on helicopter money? 10 years ago, if someone had told you you'd have had this view, would that have surprised you?
Yeah, totally. I mean, things that never happened before happen every day in monetary policy these days, it seems. So I would preface this by saying that there is no urgent pressing need to go radical at this point in the euro area. We have no risk of deflation. The growth is slowing, but we are in a low growth environment exactly because we don't have the reforms that would be required to bring the eurozone on a higher growth trend level. So
what are those reforms?
Well, those reforms, I mean, this is the usual litany, starting with, you have labor markets, product markets, services, etc., just making the economy more flexible. Obviously, a lot has to be done in education. This is a long-term initiative. But you can observe that the moment that the interest rates went down after the crisis, the reform momentum has stopped. And it is understandable. For governments, it's much easier to hope for lower interest rates. That creates the space for them to spend, rather than actually curing the underlying problem, which is low growth. So helicopter money, if in my mind, would be worth sort of investigating more, but in the sense that you give the money directly to the households, not to the governments. That's totally outlawed by the treaty. So if you give it directly to the households, you have a much clearer transmission mechanism, because people would, even if they spend just like a quarter of the money that they get until the inflation target is reached,
I'll spend it all.
You see, then you have three others who don't need to spend anything.
What do you think about is Christine Lagarde going to have a better chance than Draghi did at getting Berlin to spend more? He basically explicitly asked for it last week. And what do you think about the corporate tax cuts that are being talked about right now?
I think the fiscal spending, I mean, it's a little bit of a desperate move. I mean, the German government is clearly dragging its feet. There are obvious opportunities in investment in digital, in climate mitigation investments, etc. These things take a long time. We have a sort of a red-hot construction market, so there's not that much capacity actually to bring the money on the road now. It's not that Germany has to absorb spare capacity. We have full employment here. So there is reluctance to go down that route, and even if there weren't, I don't think it would make such a big difference. Look at Japan. Japan is a very good example. They have tried this monetary strategy for much longer and much deeper. Inflation didn't go up. They have tried fiscal stimulus like no other country. Inflation didn't go up. So, these are structural issues. You cannot solve them through cyclical policies.
It's interesting. Yesterday, almost ironically, Axel Weber told me he thinks Berlin should spend more now.
They should spend
more.
He's
one of those who resigned,
I know. They should spend more, but they shouldn't spend more sort of to save the euro area, because the amounts wouldn't be big enough, realistically speaking. They should invest because Germany is losing competitiveness, because there's a lot of investment in digital in particular, where Germany is falling behind big time other European countries and globally. But make no mistake.
And because the Autobahn is disintegrating, and because the airports are difficult to reach.
Well, I don't have that high ambitions and aspirations. I think they're pretty good. But remember, if you had all these investments happening, Germany would become even more competitive compared to the Italies and other countries in the euro area, and the imbalances in the eurozone would actually, in the longer term, increase. So that's the charm of helicopter money. Also, is twofold, because you actually don't let the governments off the hook. The money is with the individuals, and the individuals spend it on whatever they spend it on in consumption, including sort of imports from other countries. So I think this would have a better impulse on the real economy than just trying to lower interest rates again and again. It hasn't worked. It will not work now.
It's a great message to hear. It's great to have you here. Thanks so much for dropping by. Moritz Kraemer, now Chief Economic Advisor at Acreditus.